You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is time once again for episode 2 of the bi-weekly options extravaganza known as the Option Block. My name is Mark Longo from theoptionsinsider.com. Do not forget the at the start of our URL. I don't know where you go otherwise. Dark and scary places on the internet. Going to all the squatters. Trying to hang out around us out there. But theoptionsinsider.com will get you a whole bunch of cool stuff. All the great free data we're always talking about here. The earnings, move, results, season, and now trades reports. Also midday and end of day most actives. Links to all of our shows. All sorts of other cool stuff out there. People have been asking for that book club write-up. We'll get to that soon. All that sort of fun stuff can be found there and much more. Of course, you want to go above and beyond. Head on over to theoptionsinsider.com/secret club. Shh. It's just me and you here. We're just chatting in low voices. Don't tell anybody. It's a secret. And of course, however you listen, live after the fact, keep hitting us up with those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on ye old program today. First, let's go out to the former ice mecca of America, shipping ice hither and yon, even to the great Indian Empire back in the day, a century or so ago. I learned a thing or two about Maine talking to this guy. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program. We look forward to you regaling us with extensive Maine history lessons, sir.
I don't know. You know what? If we actually talked about, harvesting ice in Maine, I think I would get more hate mail. They're like, why do you guys have to prattle? Why can't you just do the option stuff? Why must you add this color all the time?
Yeah, that guy who hated the wrestling, he'll definitely hate the 100 years of Maine ice history. That's for sure.
Yeah, he will not like hundreds of years of ice harvesting in Maine. How did those ice blocks get in your refrigerator in 1902? You might ask that question.
I am intrigued. I am intrigued by shipping ice from Maine. These are the discussions that come up before the show that you folks miss because you're not part of the live show chat. But intriguing stuff. Shipping ice from Maine to India 100 years ago. Who knew? I bet you this guy knew. He's a font of interesting knowledge sometimes. He is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. Sir, do you have any of your own stories about shipping ice, perhaps down the mighty Fox River?
I kind of do. So it was interesting. At the St. Charles Historical Museum, they talk about how what they used to do was like an annual ritual over 100 years ago, how they would chip giant ice blocks out of the Fox River, and that would be how they would keep things cool for the winter in the old ice box before refrigerators were invented. So very interesting process with what they did and how they did it. So ice is a very important thing in keeping food fresh in the winter.
There you go. Who knew he had an ice story up his sleeve as well? Do you have your own ice shipping story? Hit us up. Let us know as we keep on rolling. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show where we look at what's trading out there in the broad markets. You know, this week it seems like, even though some of the news around the globe is growing increasingly dire on the Omicron front, we do have interesting news about the pill, of course, coming recently. That should maybe help alleviate some concerns. But either way, the market's showing a lot less concern this week than it did in previous weeks. Most of the sessions this week have been firmly in the green. Today, a little bit less so. We saw a nice rally yesterday. Today, still looking firmly green, but not quite north of 1% like we were recently, even though NASDAQ's getting close to there. NASDAQ's leading the charge, up about 0.9%. S&P up about 0.7%, and Dow closing in on 0.6%. Again, we saw multiple 1+% day rally across the board pretty much yesterday. So not quite at those levels, but still intriguing stuff out there. That means vol, well, quite simply, there's a whole heck of a lot less of it than there was on Monday. When we kicked off the show, VIX cash was flirting with about an 18.25. That puts it down almost 7 handles, about 6.75 points from where it was this time last episode on Monday. VVIX is down a whopping 32 points. We were hanging out in that pandemic frothy level of 150 on our last show, listeners. Not quite there today. A little bit shy of 121, about 120.75 when we kicked off the show. That puts us down about exactly 32 points from where we were on Monday's show. VXX, same deal, down a little over 4 points. Right, it was right around 20.25 when we kicked off the show. Puts it down again, a little over 4 handles from Monday's show. I see in our chat, looks like Age bought back some of his VXX weekly calls for a nickel. Well, I'm assuming you sold them for more, so congrats there, Mr. Age. See, sometimes the upside can be played for fun in products like VXX, but you got to be deft and quick on the trigger on those. And so 20.25 down about 4 points from Monday's show. UVXY, you know it's down. The VXX is down. UVXY is down at least that much. In this case, it's down almost 4.75 points, right about a 14 handle when we kicked off the show. And VolQ at about an 18.25, down precipitously, down 8.25 points from where it was on Monday's show. That's one of the biggest declines we've seen in VolQ in quite some time. So NASDAQ vol, I think, to use the euphemistic term, it's cratering, coming off pretty hard out there. Let's go around the horn, and let's go in order of ice-themed stories. Let's start in the land of Maine, where, according to him, they're not just the options mecca and the lobster mecca. They were at one time the ice mecca of the Northern Hemisphere, Mr. Rock Lobster, sir. And if you want to invite him, Mr. Volman, you both can regale us with your tales from today, sir.
Well, a couple of things. Do you recall Monday of this week?
I do recall Monday. I was alive. It was a day.
Well, do you recall the spike in vol on Monday?
I do, as I just regaled how most of our major vol products are substantially lower today. There was quite a lot of vol on Monday.
That actually was almost like, we don't have many 20, well, I guess percentage of vol moves. Everybody will be, you know what? But my gosh, that was a pretty huge candle up there, like a 27 VIX for a little bit. And then now down to 18. So massive. I'm just saying, vol man's like, wow, massive move. If you didn't get rid of your vol goodies on that day, that was your opportunity for the week. So, and I think that was the okay. So here you go. Here's a prediction. That will be the last gasp for vol from the COVID, from the Omicron variant.
That's it. We're done. It's behind us now, according to the vol man.
I think. Well, there's a couple of things. One is, Pfizer has a pill that can treat the seriously ill. Again, I don't know how good it works, but I think people are happy about it. But ultimately, you have to see how the market's reacting, and And if TOSAW can't say we're at the best place ever to sell stocks today, we have to be very close. So stocks tend to look forward, and they're looking past this variant right now. So, and I think you're starting to see a little change in the news from, it definitely is much more contagious, but it's not as serious, which could provide that, what do we call it? The herd immunity we've all been looking for. So as of right now, the stocks think that it's good news. So you take that for what it's worth, but you trade what you see and you invest what you see, and that's kind of what it looks like right now. So as far as Volman goes, the question is, can we get to any kind of new lower vol? And I think that remains to be seen, because we still have this little problem of the Fed, raising rates and seeing if that creates a little bit of a liquidity squeeze. So we've had those two things kind of side by side for a while, and now it looks like I think one is starting to peel away, and the big bright shiny light for volatility will be on how fast the Fed, does whatever it needs to do to stop adding liquidity to the marketplace at this point. I mean, we can keep complaining about it, but at some point they got to stop.
Well, I don't think most people will disagree with you on that front. I have heard more anti-Fed talk in the last 6 months than I think I've heard in the last 6 years combined. So it has been interesting to see on that front. I will point out, I do love our secret club community. They're always throwing me interesting nuggets. If you haven't joined the secret club yet, listeners, you're missing out. Like this pearl of wisdom. I did not know this, Mr. Rock Lobster, that ice harvesting in Maine is a fun plot point in some of Barbara Ross's mystery books, which are set in Maine. So there you go, Mr. Rock Lobster. A little holiday reading tip for you. Are you familiar with these Barbara Ross mystery books set in Maine, apparently in which ice harvesting is a big plot point?
I am not, but I wonder if that's where Murder, She Wrote came from.
She did live in Maine, I think, in that show, yeah.
Yeah, I think she lived in Camden.
And Stephen King lives in Maine, so I think what we discovered is Maine is the place for horrible murder.
It can get cold and a little grumpy in the wintertime, so maybe that's it.
So chat, if you're looking for a holiday gift for the Rock Lobster, sounds like a nice box set of these Barbara Ross mystery ice harvesting novels would be appreciated. The winters get cold out there in the compound on the shores of Maine. You need a little something to read by the fire, especially when the electricity conks out. So there you go. Ice harvesting mysteries. Mr. Uncle Mike, do you have any fun reading for the holidays? And B, more importantly, what is lighting up your tape out there today, sir?
I don't have any fun reading per se. I always talk about remnants of a stock operator, but one movie I'm definitely going to see. I know the kids want to see the new Spider-Man movie, so I'll probably take them to see it the next week or so.
By the way, we haven't been to a movie theater in forever. We found the least crowded theater in all of Chicago to go see the Spider-Man. Amazing. Chef's kiss. You got to go see it. Just go.
All right. And so yeah, no more spoilers, please. But yeah, well,
when they kill wait, I shouldn't say that, but yeah, amazing. I wept openly like a little girl in the theater. It was great.
Oh my goodness. But yeah, when the kids have told me how all their friends have seen it, and we're the dorks that don't let them go or whatever, but we'll do that. But then the other movie I want to see is one of my all-time heroes, Kurt Warner, Hall of Fame quarterback. His story is coming out on Christmas Eve, so I'm definitely looking forward to seeing that movie over the holidays at some point. Anyway, with this market, we have been higher, not by much, but we have been higher. So I can't really say my tagline today, but nonetheless, this is the bulls are definitely in charge, and it's very interesting the fact that we went from being in such dire straits as we were on Monday to the rally with which we have had today. And so we might end the year next week at all-time highs for the S&P 500. We're roughly 10 points away from it right now. But that was made in late November. So just looking at the chart here, it was on November 22nd that we hit the all-time high of 47.43. Right now we're at 47.27. So we're 16 points away from it. Mixing up my charts here. So on this, from a charting standpoint, we hit near the all-time high about a week ago. And then we just sold off hardcore. But we've tested it enough times now to where if you knock on a door enough times, a lot of times it can be opened. So if we do hit new all-time highs early next week, I'll probably be coming a little bit more bullish than I typically am. And so when doing that, there's always a risk, of course, of buying high. It's the concept of buy high, sell higher. But as you're doing this, it's kind of one of those things to where who are you to argue with the market and the Fed? You guys both said the Fed can't keep providing liquidity forever. And it's hard to argue that, but they kind of have been. What's going to make them stop? I mean, seriously, what's going to make them stop with liquidity? It's almost like we as a nation are so dependent on a bullish stock market now that politicians don't want to be the ones in office when things go down. So what's going to, and even though I know the Fed's technically not a political position, of course, but they want to get appointed again. So who wants to be the Fed chairman that crashes the market? So I agree that they can't do it forever, but where I would come in would say they sure seem like they're going to try. So we'll see where we're at with that. 10-year note had a little bit of a sell-off this week, so that's actually pulling back a little bit. So we are at a point to where we're getting a little bit of selling in the 10-year note to where we're getting a little bit more of a risk appetite in the marketplace. We've had a little bit of buyers in silver. We're up roughly $1 from where we were on Monday when we last spoke on the show. And that's kind of what I'm seeing right now in the marketplace.
Uncle Mike, our chat deft investigators that they are, they have also uncovered your secret, sir. So be prepared to be revealed to the world, sir, because they know. They have deduced that you are indeed the new Shiba Inu whale, the person who bought about 136 million worth of Shiba in the past 24 hours. Apparently, they've transferred some of their ETH holdings into Shiba, which is, roughly, I think, 4 trillion Shiba Inu tokens. So congratulations, sir, on your purchase, even though your identity has been discovered, sir. 4 trillion Shiba Inu. That's a lot of Shiba Inu, sir. So good luck with that one. I know we have some Shiba hodlers in our live chat, so they're probably thankful for the little bit of a pop you've given them. Yeah, transferring 136 million worth of ETH into Shiba. That's an intriguing choice. Hey, I know some of our listeners will like it. So there you go. Let's go on out now to see what's lighting it up from an overall markets perspective out there today. Let's start in the big dog, which is VIX. Not looking quite as big today, even though the ADV continues to increase. So that shows you there's paper going up, just not right now. Right now, we got 178,000 contracts on the tape. The ADV almost 730, 729. So remember, not that long ago, it was like 402. It was even broke into the threes, I think, ever so briefly. So yeah, that's quite the increase in ADV we've seen in VIX over the past, I don't know, let's say month and change out there. SPY at about exactly 3 million contracts as of a few minutes ago, which is interesting. The ADV is 5.8 million out there in SPY, so a little north of half of its ADV out there. The S at 861,000 contracts right now. The ADV 1.6 million. And then small caps. Looking at what would have been impressive, what would have been pretty much almost a day's worth of paper, let's say a month ago, now is less than half of its ADV. It's 504,000 contracts on the tape for IWM. That's a lot. But the ADV is now almost 1.1 million. So in that frame of reference, it's not so much. Let's get on out to the single names, see what is lighting things up. Listeners, cost you 275,000 contracts to break into our top 10 today. That's not nothing. That's not blowing the doors off either. It's kind of in the middle to upper band of that middle range there. Anything north of 300K is usually where I start thinking it's a pretty active day. That gets you to Nikola. So we're back in the electric vehicle front. Number 9, Pfizer. I wonder why they would be in the top 10 today. I have no idea. Must be in their ICE shipping subsidiary out of Maine. 297,000 contracts for Pfizer. Number 8, we got Ford. The on-again, off-again meme kid. I'm guessing it's on again today. Let's see where it's hanging out. Oh, it's up not that much. Not even 20 cents. About 16 cents. But still good enough for number 8. Still back north of the 20 handle. Are you folks still loving Ford at these levels? Hit us up. Let us know. Number 7. The old FB Facebook, a.k.a. Meta, at 335,000 contracts out there as well. So we got two F tickers back to back. Facebook up about 1.6% today. Then we got Micron out there, 340,000. Haven't seen them popping up in the top 10. They were an antiquated name when I was on the floor of the SIBO, and everything chip related is hot now again. So Micron back in the hot seat again. Number 6, 340,000 contracts. Number 5, we got the Symbol Twins back to back again. Haven't seen that in a little while. Number 5, AMC, 381,000. Everyone says AMC is kind of the reigning king of the memes, but AMD says, hold my beer, kid, 535,000 contracts for AMD. Number 4, another previously sleepy name that has kind of just awakened in the midst of all this chip madness going on out there. Number 3, it's Nvidia. I'm talking about awakening. This name has been on fire for a couple of years now. 618,000 contracts for Nvidia at number 3. Number 2, yes, number 2, it's Apple, 1.12 million contracts. So it seems like whoever was putting up that crazy slew of weekly calls maybe took a break today. Maybe they don't put them up this day of expiration. But c'est la vie. Apple up slightly today. But it seems like the wave of near-dated calls we've seen of late, maybe taking a bit of a break, because lately we've seen Apple well north of 2 million at this time of day. Today, a little less than half of that. It's 1.12. We've seen it at 2.4 sometimes this time of day. That means the big dog today is the old TSLA, back over 1,000. It's up 57 points today. And, of course, interesting, there's rallying on this news of course, the investigation into game playing while driving. Is that not the most Tesla thing ever, game playing while driving? I knew they had games in there. I thought they were disabled while you're driving, but they let the passengers play them. Now, NHTSA says maybe that's distracting to the driver. Also talking about selling more shares for Musk. All this apparently not weighing on the stock. Stock's up again today. So 1.9 million contracts, too. So the options are really moving. Maybe whoever discovered the near-dated calls in Apple has now shifted to Tesla. Let's just look really quickly at Tesla. Let's see what our most actives are for today out there in Tesla. So it's kind of more what you'd expect. It's not the nonsense we usually see out there. 116,000 of the 10 halves going up today. So that is pretty near-dated paper again. So I was only half joking about the person discovering Tesla. Maybe they have migrated some of that paper. 67,000 of the 1,100 calls, 66,000 of the 1060s. So maybe a bit of a vertical. Again, all this going out, yeah, of course, today. Today is our expiration day. And then we have 57,000 of the 1070 calls and 55,000 of the 1020 calls for our top 5 out here. So yeah, actually top 6. So yeah, it's all very near-dated stuff, listeners. I was partially joking about the Apple trader moving over, but some of this paper does seem somewhat analogous out there, not a put to be found. So intriguing stuff for number 1, the big dog, which is Tesla. You know what? Since we haven't done it in a little bit, let's look really quickly. Let's look at our old top positions in Tesla right now. I won't make you guys guess on the poll, because it seems like a lot of you still guess wrong, even though you should know the answer. When I ask you what is the largest size position in Tesla right now, you should always immediately go to whatever the most ridiculous out of the money put is, and that's your answer. And today the answer is the June 1 put. 147,000 of those are open right now, followed by number 2, the Jan 1 put at 83,000 of those. Then number 3, 40,000 of the Jan 20 puts. Then we drop all the way down to 31,000 contracts to find our first call, the Jan par, the 1,000 calls, which are currently in the money. So there you go. 3 nonsense puts before you get to your first relevant call out there. That's kind of what we expect from Tesla. And it's looking at expectations from an earnings perspective. Not a lot the rest of this week, as you might imagine. Thursday and Friday, kind of light days on the earnings front. We did have some names popping off earlier this week, though. We had Carnival, we had Micron, again, the aforementioned Micron, and Nike. Tuesday, we had Rite Aid and General Mills. And yesterday, we had CarMax and Paychex out there. Everybody loves Paychex. Oh, you know what? Just because the Rock Lobster is on with us, we have a earnings report hot off the presses here for his favorite name, Cal Maine Foods. Even though they're an egg producer based in Jackson, Mississippi. For some reason, they have Maine in the name. So there you go. Mr. Rock Lobster should like it. Ticker symbol CALM, C-A-L-M. And they're popping off next week after the bell. They're trading at 36.20 as of this report. They're pricing at $1.72. In the past, they moved to $1.16. So there you go. a little bit extra juice there in Cal Maine Foods. I'm just checking for the earnings trades. No new earnings trades added to the docket, but you can track the previous trades out there on the buying and selling of straddles and the buying and selling of calendars. And of course, you could check out the season, which has wound down to pretty much exactly a tick below break even, 99% right now for this past season. Week 1, 98%. Week 2, the worst, 58%. Then week 3, back to 90%. Week 4, outperforming 114%. Week 5, almost getting there, 99%. Week 6, back to outperformance, 119%. So the best week was the last week, perhaps boding well for future earnings cycles. And all of that averages out to pretty much the best cycle we've seen since the start of the pandemic at 99%. Will that trajectory continue? We shall find out in future reports. But now it is time to keep on rolling. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, let's do it. Let's get weird. Let's get wild. Let's get whimsical. Let's kick things off. Let's see what the Eye of Sauron has fixed its fiery gaze upon today. Let's see. Oh, yeah, here we go. Interesting one. This is one I think we've talked about before, but it's been quite some time. What is this? No, they gave me the wrong ticker. I was going to say, wait a minute, someone's buying the 21 calls? That would be ridiculous. No, they gave me the wrong ticker. Here we go. After all that saga, that's what I thought this was going to. Okay, Ares Capital. There's multiple Ares out there, even though the actual Ares, which is a cooler ticker, is not this name. This is Ares Capital, ticker symbol ARCC. There we go. All right, that's better. All right, so let's reverse everything we just said. A year ago, they were trading. Right now, they're trading $20, almost 21, 2070. They had a nice run, though, too. A year ago, it was trading $16.40, and they were pretty much mostly straight up. They rallied all the way up to October 28th. They got up to about 21, almost $22. And then they sold off from there. Similar trajectory to the other one, right back down to 1966. They bounced, though, on December 20th, same day. And then they've rallied the last few sessions as well. So kind of moving in lockstep with the other Ares, just a little bit lower price level here. So what do we find out here? Now, this is the call love I was talking about here. Someone thinks this near-term pop got a little bit more steam in it, Mr. Rock Lobster, but they're not breaking the bank either. They're coming in, taking a nice, decent, I won't even say this is a swing at the bat. This is more of like a bunt. Maybe you're trying for a double because they only paid 15 cents. They bought 4,370 of the Jan 21, so 30 cents out of the money right now. They paid 15 cents. It's not even that high of a vol. It's about a 13 vol. So it's a fairly reasonable trade, all things considered. The stock was a little bit lower when they put them up. It was about 2060. So good chance these are a little bit firmer right now than when they put them on. There are no earnings, though. The next earnings announcement is in February. If there were earnings, I'm sure there'd be a little bit more juice on this one. So I had to say, Mr. Rock Lobster, in the annals of all the upside call paloozas we've seen over this mad call-heavy year of 2021, this one has to be one of the more reasonable. Would you concur?
Well, let's see. I'm going. Let's see. Reasonable. I guess this is our last. Oh, we got one more show. Next week. Is this reasonable? I mean, if you're going just straight on, it's very close to the money with a month to go, I would say yes, it's reasonable. This is a, what is this, like I'm just looking at this, huge dividend. What is this? Specialty finance. And they do all kinds of loan. They do all kinds of financial shenanigan junk. Let's see here. I mean, yes, it is reasonable. My big question is the performance of this company related to interest rates. So they think rates are going higher. Does this company do better? So, I mean, it pays what, $1.60 in dividends, which is a pretty huge chunk. Like an 8% dividend yield in this thing. So interesting. I would say they got a shot. They got a shot to double their money. Let's just put it that way. They got a decent shot to double their money.
Yeah, I'm not saying I love these. I want to piggyback on these. I'm just saying compared to all the other trades we've seen this year in terms of premium outlay, in terms of vol level, and in terms of amount of price movement required to break even, these are comparatively very reasonable, sir. They don't need a 80% move in 3 days, and they're not paying a 200% vol to do it.
Correct. I mean, all things, this is, it's a lot easier for your calls to make money when you don't give them a bridge too far to go over. So, you have to think about when you put on a trade like this is what would have to happen in order to make my exit look good? And I know I know it's kind of a goofy thing we do, but looking at the AMC 145 calls, when we do the oddities program on Fridays, like there's still interest in those things. And okay, I guess statistics doesn't mean anything to some people in the meme age, and we might all fondly remember it as days gone by in 2022. But this is what I would say. At least these are well within the statistical probability of paying some money. So I judge them much better.
Yes. That's how we damn them with faint praise. Well within the statistical probability of actually making money, which at the end of the day is what you're buying calls for. So we'll keep an eye on this one. I have a feeling I might have a chance to actually make some money on this trade. Of course, we'll see that there'll be $3 winners and they'll still be open on expiration because no one closes anything out anymore. Let's go on out now let's pay off some of the names we've put into our hat. We can't keep putting names in. We got to take some out every now and then. Let's go back to Ballard Power. This one was a frequent offender not too long ago here on the show. In fact, we last talked about them on November 22nd, listener. So pretty much exactly a month ago. And let's see. At the time, we reviewed the DES 14 puts going up pretty sizable, 26,110. That's a lot for Ballard, going up for a whopping 11 cents. Right on the bid, pretty much. They were a dime at 20 cents. They were bid almost instantly in their face as soon as they sold them. So they instantly failed the first rock lobster test, which is, are they bid out against you or offered, worse? And the answer was yes to that. So that was not good. It was a 60 vol. It wasn't a heck of a lot of juice, though. And there were no earnings in this. Next earnings are March 9th. Stock at the time was $16.77, and Ballard's had quite the run. A year ago, it was trading $23.48, got up to its high for the year in the meme frenzy on February 9th of about $42.28, and then since then, it's kind of just been a lot of precipitous downside. It sold off pretty hard, hit $21.15 on March 8th. By May 13th, was trading $13.83 again, and it's kind of bounced. Let's say it bounced in the teens, pretty much. It got up to 18 a couple of times. But it bounced from like that 13 to 18 range for the better part of the rest of the year. Again, hanging out where it is right now, $12.74. In terms of these puts, though, they went out back on DES expiration, and the stock closed there pretty much close to where it is right now, $12.87. And as you know, these puts were still open because nobody closes anything out anymore. These puts were still open at expiration. So maybe there's a chance they really wanted that stock at $13.89, in which case they got their wish because the stock was more than $1 and change below that strike at expiration. These puts were still open. So at least on the option side of this trade, they dropped about $2.6 million on these, but they got what they wanted. They bought the stock at a lower level. Again, they bought it substantially lower. They bought it nearly 4 handles lower than where it was trading. So from that perspective, you could say, hey, well done for you. Of course, the stock has continued to drop since then. It's down another 20 cents on that. So they're continuing to wear it on this trade. So they're closing in on $3 million to the bad now. But again, if they bought the stock where it was, that'd be even worse. So Mr. Rock Lobster, it's very rare that we see one of these line in the sand puts blow up in someone's face, but this would happen to be one of them. And it seems like either they couldn't take their lumps and close it out, or they really wanted the stock at $13.89, sir, because they got it, a lot of it.
Yes, they did. This is, I can't remember the last one that is lit up like this. It's been a while.
It has been a while, yes.
A very long time. So, this is a, what is this? Do they do the fuel cells? I can't remember exactly which sort of green shenanigans
the solid oxide fuel cells.
Yeah. But, of course, I do wish all these magical battery companies success. However, this one, they've got some work. They have some work to do to make some money on this one. So what I would say is, I think they're wearing the stock. Maybe they sold it right away, but we'll see what happens here. They have 2.6 million shares to go at some point, and it doesn't look like they're selling them today. So that's when you sell puts. Like my easy rule with my students are, sell puts are actually, I just say it's the easiest rule for selling options is sell options where you can afford to take delivery. And if you can't take delivery, you probably shouldn't sell them. So that's my simple words of wisdom on that. You can ignore it at your peril, but ultimately, I don't care who you are. If you've sold an option, you've had to take delivery one way or the other. I'll bet you have, Mr. TOSAW has, and I myself have. So that's kind of the way, that is the game that you are playing. So you might as well understand the rules.
Get your stock. Hey, it's better than just working limits because you don't get paid anything for that, listeners. So might as well get paid a little bit every now and then for working your limit orders. So there you go. This guy got what he wanted. Let's go out now to another payoff. This one actually going out today. So kind of a bit of a live one, which is fun. This one we talked about on November 18th. This is good old Constellium, going back to Constellium SE. Oh, this is our favorite. This is the manufacturer of rolled aluminum. Yes, they're back, listeners. I'm going to say aluminum as many times as I can. Trading right now. Well, I'll get that in a second. Let's see first what we talked about on the show back on the 18th of November. We saw someone, once again, the put selling. It's pretty ferocious out there these days. There was the D's 16 halves going out today on the 23rd, so in the weeklies, going up for 32 cents. Let's see. There were 25 cents at 45, so they got a decent fill at 32 cents. I don't think they bought these. That would be quite the decent fill indeed if that was the case. It is a bit of a wide market, though, so there is some leeway in there. About a 49 vol. At the time, the stock was $18.77. There are no earnings. Next earnings are in February of next year. And looks like these 16 half puts, let's see, the stock right now, 18.04, listeners. So it has dropped about $0.75 buck, but not enough to threaten the 16 half handle. And surprise, surprise, these puts are still open. So I'm going to go out on a limb and say they probably sold these bad boys. In which case, Mr. Rock Lobster, it looks like they're up in the neighborhood of $200,000 on these, lest Constellium plummet 1.5 points in the next few hours, sir. It looks like they're going to be keeping all their juicy premium in this rolled aluminum manufacturer, sir.
I believe, yes. I believe we've looked at this name before.
Yes, that's why it's a review of previous activity, sir.
What's amazing is how I just pick up on this.
Nothing gets past you in the post-COVID era, sir. You're sharp as a tack.
I have to say, since I've had that thing, my brain, as sharp as it was before, it's so much sharper now than it used to be. So I think they're going to they appear to be skating on this one as they roll right into expiration. So they picked a good put to sell, and that will make some of their shekels back from the trade before. So
yes.
that will definitely help. So whoever Mr. Line in the Sand put is, he's going to make some of his money back, and that will make his Christmas not as sad, and he probably still will be able to afford the G.I. Joe with the Kung Fu grip.
You know what they always used to say when you walked on the floor of the SIBO back in the day? There's always juice in them thar rolled aluminum hills. Just got to go out and find it. And we have to find some of your questions. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's do it. Let's get out into the wild waters of your questions and your comments, also your feedback, which you like to solicit on things like our question of the week. Currently, our question of the week is thus. We kicked off the year riding the meme stock wave that has the interest in names like AMC, Game, Rocket, and BBig, and so on. Has that begun to cool? Quite simply, is the meme stock wave dead? We gave you 3 choices. Can't just give you 2. We gave you 3 choices. Yes, no, and I prefer crypto for your left field choice. Let's go around the horn. Uncle Mike, you already bought $134 million worth of Shiba since the last time I talked to you. So clearly you prefer crypto. But what do you think our audience is voting for, sir?
I think they prefer crypto too. I'm going to go with that this week.
Oh, interesting. All right. Uncle Mike going straight full on into crypto. He's talking up his book. Now the proud owner of 4 trillion Shiba Inu tokens. I can't even say that with a straight face. It would be fun if that was the case, though. St. Charles Wealth transforming overnight into an all crypto all the time destination. Mr. Rock Lobster, when you're not slinging ice, sir, what is your vote here if you have one? And then B, more importantly, what do you think our audience is voting for?
I'm going with TOSAW on this. I'm going with TOSAW on this one. And I think ever since he went on Twitter, he's become a bit of a cryptoholic.
He's secretly got some Shiba and some Doge squirreled away somewhere in a secret wallet that no one knows about, not even his wife. He comes on here, he talks a good game, but he's hodling all day long in his other alter ego there of St. Charles Man. Let's see if you and Uncle Mike are correct. And actually, no. So far, the resounding over half, 53.4% saying no, the meme stock is not dead. 39.7% saying yes, it is. And I prefer crypto, only 6.8%. So Uncle Mike and the Rock Lobster turning to the dark side for no reason. Our audience has rejected your choice wholesale. So there you go. You got about a day or so left, listeners. Get out there. Do you prefer crypto? Hey, get in there. Make your voice heard. Fight that percentage up. Do you hate crypto? You think maybe you hate the meme stocks, think they're dead. Vote there. You love the meme stocks. You want that to keep going. Vote no. Get out there. Make your voice heard. Just like this person here. Let's go out to DCCC. DCCC wants to know. He says, this one confounds me. Oh, perhaps it will confound us as well. He says, can a put debit spread ever be worth more than the width of the spread before ex-dividend date if the price of the short leg is higher than the current price of the stock? Well, that's an intriguing way to put it. So put debit spread, so you're buying this thing. So you're long the meteor put, obviously short the farther out the money put. You're saying if the strike is higher, so the put spread is now in the money, if in that scenario, with an ex-div thrown in for good measure, in that scenario, can a put spread ever be worth more than the width of a spread? Well, first off, if you're willing to pay more than the width of the spread, there will always be someone who will sell it to you. If you want to pay $5.05 for a $5 spread, then yeah, someone will sell that to you probably quite happily. But I think in a lot of these scenarios, what maybe you're confusing is sometimes, especially if it's in the money, going right into ex-div, some of those markets can widen out. Like in this, you don't say how wide your spread is, but in that case, you could have a really wide kind of in the money leg. What your brokers often are going to do, right? They're going to show you your bid, your ask, and your midpoint kind of there. And if you're looking at the extremes of those bid and offers on a wide leg, it could show you a price that is beyond, let's say, the $5 or whatever the width of your spread is. Doesn't mean you have to trade it there, and hope the love of God you don't. But you could see prices disseminated there. Is it worth that? Well, that's a different story. Let's go around the horn. Let's go to the Uncles and Mikes again, because he's hodling like crazy right now. So let's get him back to the traditional world of options and away from crypto. Mr. Uncle Mike, sir, can my debit put spread ever be worth more than its width, sir?
It could in theory, and I'll be honest with you, there are times to where I've taken one. I'm so adamant about getting out of things before expiration that I've taken things. I've seen it to where I've closed spreads further out than what their actual width is. And on expiration, just because I didn't want to deal with it, I'm like, okay, it's a loss, but then they'll cancel each other out. I'm like, you know what? I don't want to have this headache. So I end up losing a penny more than what I thought I would at times on spread. So I've done that before. So it is possible, but like what you said, Mark, when you see spreads that are super wide, where the bid-ask spread is super wide, oftentimes you'll see the midpoint quote with your broker. And so the midpoint might be fairly significantly higher than where the actual price of it is, but a lot of times it's closer than where the real market would be a lot closer than where you would think it would be. So with that, if there is a dividend baked in, I'd have to wrap my brain around that a little bit because I've never really thought of this before, quite frankly. But typically, if the spread, like you said, if you're looking to buy a spread for an amount greater than the width of the spread, there is always going to be someone there to take that trade from you. So I'm not sure. I'd have to think about that one a little bit more in terms of if there's a dividend factored in.
Yeah, it's interesting because, you're right. People can do things that are against their economic interest just to take risk off the table. I used to see it sometimes, in the S or other things. You got some weird spreads on. You want to just take them off, and I never paid more than they were worth, but I could maybe see in your example, you just want to be done with it. So you pay a nickel or a dime more. It's not economically sensible, but you want to just get that risk off. I get that. You're paying a bit of a premium to do that. It's not worth that, though. That's the question. Is it ever worth that? Mr. Rock Lobster, sir, what do you have to say on this? Kind of interesting. He says it confounds him, but it is an intriguing one nonetheless, sir.
I'm trying to, again, this is something I have to sit down with a pencil. I'm trying to think so what Mike said is, yes, the market risk could definitely be wider. So when you look at it on your broker platform, your $5 put spread is worth $6 to cover, right? You don't want to buy that. The second part is, if you have just because it just happened like in Valley and Petrobras and stuff like that, where the puts are kind of sky high. So if you were trying to close that put, I could see where the divvy is more, but the stock is below because you're saving. You don't have to pay the dividend prior to owning the put, and then the put gets then the put goes back to parity after expiration, after XD. So I'm trying to think, could that put spread, because the stock is beneath both strikes, both puts would have to have each strike would have to be liable for the.
He says one strike. Only one strike is in the money.
Only one strike is in the money.
The price of the short leg.
If the short leg is higher.
Oh no, the short leg. The short leg is higher. I was thinking the more in the money leg. But you're right. He says both. You're right. I misread it.
I don't see how that could be. I'm trying to think of that there is, even if there's like a weird stub where the OCC, is changing what the underlying makeup is. So I can't think of one. But again, I have COVID brain. But most times I would say there's no real reason to pay more than the difference in the strikes. One reason, like Mike said, is if you do settle right at the short, you might want to close your short strike, like effectively close the strike in case you don't get assigned on it. So I could see paying a penny up, for that because you're kind of stuck at a weird price. So I see that, but I don't see, because both strikes would be liable for the divvy in that case. And they would both be, the divvy would come out of each one relatively equally because they'd be both about 100 delta exercise on XD date. So I can't see that as a reason, but you can play stump the band and maybe somebody can come up with something, but I can't see it right now.
I think DCCC, I think you just saw a crazy quote. Even with both of them being in the money, you probably saw a crazy quote on your broker, and maybe you intuited a little more into it. But you're right. The divvy does throw a bit of a question mark into it. I still can't think of an economic reason why you'd be incentivized. It'd be more of like what TOSAW was saying. You're paying up, acting against your economic interest just to take something off the table you don't really want to have on anymore. Again, that's not economically sensible. Sometimes people do those things just to remove risk. But outside of that, it's an intriguing thought question. Nonetheless, speaking of intriguing, our chat, I love where they pull these things from. They wanted to remind me that when you're not slinging ice, which I said earlier, is slang for when you aren't selling heroin. I love this show. Yes, that was my intent all along, to sling in or to work in some drug slinging vernacular. Thanks for bringing that to my attention there. I love our listeners. They're keen-eared as always as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
See, that's what our listeners love. They love a little bit of drug slang worked into the show. So, Mr. Uncle Mike, if you have any drug slang to share with them, have at it. And then, more importantly, what are you keeping an eye on in this lengthened holiday weekend, sir?
I don't have any drug slang to share, but well, what I'm keeping an eye on, there's no trading tomorrow, so keeping an eye on trying to make it a great Christmas experience for my wife and kids as best I can, and being with family, and trying to go out and help somebody. If you don't have anything to do on Christmas, go out and serve food at a homeless shelter or something like that. It'll be very rewarding, I promise you that. So that's what I'm watching. And then next week, it is typically not a very eventful week, but you never know. Typically the day after Thanksgiving is not very eventful, and we saw what happened this past day after Thanksgiving this year. So watching to see if we can end the year on new all-time highs.
That's a good idea. Go out and help someone. Whatever you do, don't sling ice to them, which is also, I've been pointed out now, can also be meth, not just heroin. So a twofer on slinging ice. Mr. Rock Lobster, when you're not busy slinging literal ice up there in Maine, what are you keeping an eye on for the rest of this holiday week, sir?
Oh, dear. Well, I guess, yes. The rest of this holiday week, I'm keeping my eye on nothing. I might be keeping my eye on ice on the ground. Hopefully I could skate on some with my kids. And as far as next week, the only thing that I'm seeing how it appears that we are recovering from the Omicron thing. Like the market's straight up, they're starting to vote with their dollars, right? They're voting with their dollars straight up at this point. So I would say that, number one, and see if this truly is the end of the pandemic, or at least the beginning of the end, which would be great. And yeah, looking at all-time highs, because at the rate we're going today, we could end up there by the end of today, a closing all-time high. So, what the heck? Let's just keep the party going into 2022. Why not?
Let's all keep slinging our ice into 2022. But that music means no more ice slinging for today, listeners. But don't worry. If you need a little more ice in your life, well, don't worry. We'll be back in exactly half an hour with none other than Uncle Mike himself joining me on the old Twifo to break down one of our final episodes of the year before next week's big year in review spectacular. We're going to break down all the biggest movers and shakers for the year next week, all the big cross correlation, all that surprises, all that crazy stuff coming up next week. But we got one more to get to there. Uncle Mike will be joining me. Will he get on the boat with a 10-year note? Knowing him, he probably will, but we'll find out. Mr. Uncle Mike, sir, before we get there, where should they go if they want to reach out to you to learn more about your vast and growing social media empire?
By all means, follow me on Twitter at Mike TOSAW, TOSAW. Feel free to check out my YouTube channel. There's one video now. What is a call option? It's very basic, but a year from now, I will be celebrating the 50th video on there. So very excited about that. And feel free to visit my website, stcharleswealth.com, if you want to learn more about working with a financial advisor who delves in the option product when needed.
When he's not busy picking up 4 trillion Shiba Inu, he'll sell a put or two. stcharleswealth.com is the place to go to learn more. And Mr. Rock Lobster, sir, you're not busy ice skating and doing other seasonal activities. Where should folks go to learn more about what you got going on, sir?
OptionPit.com, memberships. And if you say you listen to me on this show, when you talk to Ted, 888-TRADE-01, you talk to Ted, tell him I said you can take 10% off anything there. Just for listening to this show.
Ted, the keeper to the kingdom. Tell him you talk to me, you get 10% off. How nice is that? A little seasonal bonus for you over there in the land of the pit, optionpit.com. If you're hanging out in the land of the chat, don't worry. You get some fun stuff pumped in there. We'll be back now in 28 minutes to break down the wild, woolly, and whimsical world of futures options. If you're listening after the fact, just hit next. And we'll see you back here for TWIFO. Then, unfortunately, no vol views and no oddities tomorrow. Don't blame me. Markets are closed. But we're back again on Monday. Another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.